Hey everyone, in this video I'm going to be talking about the exact suburbs that will genuinely have some pretty significant, pretty massive capital growth. I'm going to be giving you the exact suburbs in Brisbane. Okay, so I know that so many of you watching in my Facebook community, there's almost 6,000 of us now, clients and investors. You guys have been holding out for this video for I think a week, so thank you for being patient. And my growing YouTube community, I know you guys have been looking forward to this as well. I've done another video on the pockets of Brisbane that will do really well, and I know there's like sort of dozens and dozens and dozens of comments telling me to just reveal the exact suburbs. So that's exactly what I'm gonna do. But the sales pitch, there's no catch to this, but what I do is I help people achieve passive income by buying the combination of positive cash flow plus high growth property without using a buyer's agent, right? Being self-dependent, being self-reliant, without having to fly around the country to do inspections, all that's handled, and without wasting years doing research on real estate. These mainstream websites like RP data, all that stuff, flag it, don't need it, go straight to the raw data, and this is what the results lead us to, okay? So here are the exact suburbs, I should say, that you should actually invest in, depending on your strategy, but these will have massive growth. And you know, you'll never find a buyer's agent or property advocate or buyer's advocate or property investment company or property strategist or any of those property people that come on your Facebook newsreel, that come in your news feed with sponsored ads. No one will ever give you the suburb because they don't know. Hardly anyone knows the data. This is a fact. I don't have a monopoly on the data, but I can say that I have somewhat of a monopoly on how to interpret the data because it's based on multivariate regression analysis. It's based on statistics, right? So none of the suburbs that I'll share with you right now in this video are based on these high-level things like proximity to CBD or infrastructure or like population growth or whether there's a train station there or whether there's a nice cafe there or the type of schools in the area. None of that stuff actually matters at all whatsoever, nada, for short-term growth. And what I mean by short-term growth is first 2 years, first 3 years, max first 5 years. All that other stuff, is important, don't get me wrong, but that stuff isn't going to help you outperform in the short term. And the way that math works is that we need the short-term growth because any future growth compounds on that existing growth. That's how property investment works. You need the initial growth for you to be able to recycle the debt, take the equity and buy again and again. If you're just buying based on population growth, infrastructure, all these things that people talk about, they'll sell places like Homeview, like Ormeo Heights, like Coomera, like all these places on high-level sales pitches like, oh look, it's between Brisbane and the Gold Coast. In the future, the population will increase here. It'll become one big city. There's big infrastructure going in. It's a growth corridor. All this sort of stuff. And then what you find is that thing doesn't increase in value. Like just today, sorry, I'm going on a bit of a rant. Just today, I spoke to a potential client, and he bought a place in Homeview, which is between that sort of Brisbane Gold Coast corridor, from an investment company, and promising all this stuff. But 2 years later, zero growth, right? So house and land package, so this is what I mean. None of that stuff actually matters for short-term growth. We want it for long-term growth, but we also want short-term growth. And hardly anyone knows how to do this. In my last video, you would have seen, I actually said that Brisbane is not going to boom this year. And a couple of people asked, well, what's your definition of a boom? And my definition of a boom is that it will not increase more than 10% in 2021 on average, on aggregate, right? So why am I producing a video now on the exact suburbs that will boom, on the exact suburbs that will actually go up in value in 2021, 2022, when I just said Brisbane won't boom? Well, you have to go back to previous videos because if you're a novice investor, what you're probably trying to do is you're probably trying to figure out around Australia which city is going to do the best. But if you're an advanced investor, you'll know that it doesn't matter which city is the best. Within a booming city, there are suburbs that slump. Within a slumping city, there are suburbs that boom. The suburb, the local government area, the suburb is way, way, way more important than the city, right? They can work the opposite of one another. There's hundreds of examples of this, and you can only ever buy one property in one street, one suburb. You can't buy the city anyway. There's no index fund or anything like that in property investment. Okay, so even though Brisbane won't boom, I don't want you to think that you can just buy anywhere in Brisbane, especially if you're watching in Sydney and Melbourne. I know you guys have been spooked to by basically every buyer's agent that has ever existed that Brisbane is the next one to boom. It is not going to boom. How can I be so sure? Watch my last video. But regardless of that, there are some suburbs that will do extremely, extremely well. And so without waffling on like every other YouTuber, I'm going to give you the exact suburbs right now. And I want you to know that if you're in Sydney or Melbourne and you're thinking that, okay, PK is giving us some good suburbs in Brisbane, that's great information. But for me to actually execute upon that, I need to hire a buyer's agent. Once again, you don't need to do that. Everything you can do by yourself, alone, using the right team, without having to spend thousands of dollars on anyone, okay? You can do this, all the inspections, everything, all the due diligence, you can do completely remotely without having to catch a flight, okay? So if this video gives you value, give me a subscribe, give me a like, a love. If this doesn't make sense, comment below, I'm gonna help you. If it does make sense, let me know. If you want any other cities for me to cover or broader Southeast Queensland region, leave a yes below. Here are the exact suburbs, starting with Graceville. So we're gonna go probably in a clockwise manner like I've done for Sydney and Melbourne. So if you haven't checked out those videos, I've done this exact same video, which suburbs will boom for Sydney, for Melbourne. I've done them a year ago as well. So go back to those videos, see whether it's actually right. You'll see that it is right. This is all about accountability. I want you guys to bookmark this video, come back at the start of 2022, start of 2023, and see, is what PK is saying actually legit? Did it actually happen? If you want to do that right now, you can go back to previous videos and you'll see that it did, but you can continue to hold me accountable, okay? So the first suburb that will do incredibly, incredibly well is Graceville. And I'm going to tell you the reasons as well, right? I'm not just going to tell you and expect to just follow me blindly. So Graceville, and let's go through the reasons. So Graceville is a pretty nice suburb, around a $900, $1 million type suburb in Brisbane. And by the way, there are good suburbs regardless of the price point that you buy in. It's not that a more expensive suburb intrinsically is better. There's no correlation between capital growth and prices. So let's just go through it. Auction clearance rates. So auctions are actually quite prevalent in Graceville, and that's why auction clearance rate is something that we actually want to look at for this suburb. So it's doing really, really well. It's well above 75%, and auction clearance rates can be quite peaky, can be quite volatile. The great thing about Graceville is that it's been consistently over 75 for the last year or two. The percentage renters on market. So this is a really good sweet spot. There's only about 23% of all houses that are rental properties. So there's not a glut, there's not an oversupply of investment properties. The great thing I like to see in Graceville is that the days on market has been coming down, which means from the point of a property listing to the point that it's gone under contract, it's now unconditional, that is not really taking more than 50 days, right? So this has actually come down from above 90 days since about September. I've actually got my laptop here, that's why I'm referring to it. Since about September last year. So that gradient is actually really good. When it comes to finding your best suburb, you need to look at thresholds, you need to look at gradients or chart analysis, and you need to look at weightings. Okay, not every factor is equal. You won't find a unicorn suburb. You need to be able to make those trade-offs. Okay, so these are just some of the factors that we look at, but I'm just revealing some of them so you guys can be educated. Online search interest is through the roof for every property for sale. There's more than 2,000 views on real estate and domain. So that's really important. Gross rental yield's not fantastic. This is clearly not a positive cash flow suburb. Percentage stock on market is really, really strong. So what we sometimes see that property investors do. They only focus on the demand side, they ignore the supply side. Stock on market is a really important supply side metric, because even if demand is super high, if supply is also super high, they cancel each other out. And even though it's a hot market and properties are selling just like that in a day or two, that does not actually guarantee price growth. All right, connect that with that point. Just because it's a hot market, just because properties are selling like hotcakes, does not mean that prices grow. Okay, I know some of you will disagree with that, but statistically, if you correlate that last 35 years, what I'm saying is correct. If supply is high, then demand can be very high, but prices won't grow. It's economics. And so in Graceville, supply has been coming down. It used to be above 2% about a year and a half ago. Now it's 0.5%. That's really, really good. That means that it's hardly anything for sale. So the demand is actually having a causative effect on price growth. Vacancies next to nothing. So once again, so many of you, have this fear of what if I can't find a tenant? I've done different videos on that. Go back, in my YouTube channel, in my Facebook group, but really it's a non-issue, okay? As long as you follow the data. And here, the vacancy rate was very high, 2.5% in 2018. Now it's come right down to 0.5%. So I wouldn't have bought this suburb 2 years ago or 3 years ago, but right now it's actually worth buying. So one thing I look at is the reliability of the data. Sometimes people ask, well, if you don't use CoreLogic RP data, if PK, you don't use Australian Property Monitor, if you don't use Price Finder, if you don't use Residex, if you don't use any of these mainstream providers, like how can you trust your data? We go to the raw data and we assess its statistical reliability. The fidelity of what we're looking at is very, very important. You don't need any of those subscriptions to any of those providers that I just mentioned, right? All you get is a bunch of pie charts and bar charts that mean nothing, and you don't even get all the data that you need. And then average vendor discounting, so that's super low. It's well under 4%. We would like that to be a little bit lower actually, but it's trending the right way, and it meets our threshold. So for that reason, I can tell you right now, and you can hold me to this in a year's time, that Graceville has just started its growth trajectory. In the last 5 months, it's gone up by about $50,000. That is going to continue. I wouldn't be surprised if it bumped up another 100, 150 in this year and next, even despite Brisbane not booming. Okay, so let's just go through a few other suburbs. So I really like Chapel Hill, so we're going to go through clockwise. So Graceville is kind of, near the University of Queensland, where I went actually. So Graceville is kind of southwest of the CBD. And by the way, proximity to CBD has no influence on why I picked these suburbs. You can throw that garbage metric out the window. I know many experienced buyers agents and people that you're probably following content, they espouse this a lot, but when you once again look at the statistical regression analysis, there's no correlation between capital growth and proximity to CBD. Feel free to disagree, by the way. You can comment below. I can back these statements up with data. Chapel Hill, so we're going up north a little bit, so I really like that suburb. Chapel Hill is a really nice family suburb. Not that in of itself has any bearing on what we'll do, but it's a nice suburbs. It's built in. There's no developable land supply. It's a really good owner-occupier suburb, and that's the thing. You want a suburb that is driven in value by owner-occupiers, because that means the price growth is sustainable, not by property investors. And this is the mistake that you guys in Sydney and Melbourne make. You go to a buyer's agent or you go to a property investment company, they spruik Brisbane, next one to boom, all that kind of stuff. I even know, I'm in Sydney right now, this is an Airbnb. You can see my clothing rack at the back there. I know in Sydney you go to like some malls and there's like these people in kiosks in the mall, kind of these property people trying to sell, developer stock, and they're trying to sell you a property in the mall in Queensland. It's ridiculous, right? Being from Queensland, it's a completely different dynamic. A separate video, I'm not going to go into it in too much detail, but Chapel Hill, really good. Then if we go just for a second, if you go South Brisbane, and we're not talking Logan, I'm not going to talk about Logan, I'm not going to talk about Moreton Bay, I'm not going to talk about Ipswich. because none of those are going to boom. Okay, you heard it here. If your buyer's agent is saying with all his charts and her, reports that any of those areas are going to boom, you just need to get more educated, and perhaps they need to get more educated as well. Those don't make the grade, but Holland Park, okay, just north of Mount Gravatt, which by the way is also an amazing suburb for growth purposes. Holland Park is one that I want you guys to keep an eye on. And then if we go north, this is my favorite part of Brisbane. This is actually where, we're hoping to, if we stay in Brisbane, we're hoping to buy a dream house, or another dream house, so to speak. Grange, okay, so fairly close to the city, but that aside, it's got a really nice cluster of strength. So there's Grange, there's Wilston, there's Gordon Park, there is Ash Grove, there is Alderley, so Grange, Wilston, Gordon Park, Ash Grove, Alderley. I really, really like those suburbs. And this is the thing, when you can find strength in the data that I mentioned, as well as others that, I can't mention in a 10, 20-minute video, when you can find strength in the data in not just one suburb, but in a cluster of suburbs. And what that means is that, there's nowhere for people to go. Prices have to increase. It's like a tsunami effect. One suburb increases and it's not like the second one is weak. They all increase at the same time, and the wave just gets bigger and bigger, right? It never crashes. It just gets bigger and bigger until finally the, surrounding suburbs start to increase. But that may or may not happen because of affordability, but that's a little bit technical. Those are those suburbs. And then if we come down sort of south again, sorry, I didn't end up actually going clockwise, did I? Sorry about that. If we come south again, you look at Camp Hill. So Camp Hill's a really good suburb, near Cannon Hill, not too far away from Coorparoo. These areas did really well. People who think that Brisbane has never boomed don't realize that actually specific suburbs have boomed. And so places like Camp Hill, Coorparoo did extremely well between 2013 2016. They've been a bit lackadaisical, a little bit malignant for the last few years. But once again, when you look at the chart analysis, like stock trading, there's fundamental analysis and there's technical analysis. If you look at the technical analysis of property investment, of suburb analysis, you start to see that Camp Hill is going to do remarkably well. In fact, let me just bring that up on my computer right now. I'm just looking at the data system that we have. So Camp Hill, once again, north of $900,000, and exactly like I said, in the last 2 months, so bottom of the market in this cycle, last 2 months, it started to increase. It's gone up about $30,000-$40,000 in the last 2 months. Okay, so this is the thing, when you can analyze across 3 dimensions, chart analysis, thresholds, and weightings, you can actually pick the bottom of the market. It's not like we can predict capital growth to the T, but we know relatively which suburbs will grow the most based on quantitative analysis, not my opinion. My opinion doesn't matter a farthing. So the next one is Tarragindi. Now I know that this is also driven by owner-occupiers. Tarragindi is, once again, a really good suburb. In fact, it's a really good suburb for for first home buyers. So I'm just gonna bring up the data for this one as well. So Tarragindi, so the average price around Tarragindi, first home buyers, maybe a little bit higher income first home buyers, so about 800 to 900,000, touching 900. Once again, a family suburb. A lot of young couples are coming in here, older people selling out, downsizing, and so this suburb is starting to become more hip. How do I say, the old Camrys sort of turning into Audis and that kind of thing. So it's gentrifying a little bit. Not that it was commercial, but it's becoming a little bit more happening. But once again, back to the data. Renters on market really low, days on market really low, online search interest through the roof, vacancy is very acceptable, hardly anything for sale, stock on market really low, which is actually a good thing. Discounting is basically non-existent, and the data is very reliable. So I have no problem in saying that Tarragindi is going to do extremely well in the next 2 years, as will if we go a little bit more east over to Carindale. So Carindale has been a perpetual high performing suburb, and if I look at the recent performance just in terms of price growth, while this is loading, I just want to say that price growth historically has no bearing on future price growth. Okay, so just because it's grown in the past doesn't mean it will grow in the future. Equally, just because it hasn't grown in the past doesn't mean it won't grow in the future or will grow in the future. Okay, so if you're doing suburb analysis on realestate.com and seeing which suburbs have done well, that has no bearing on whether they will do well in the future or not. So Carindale has been a high performing suburb since about 2013-16, and now it's just showing signs. It's not actually started to go up again, but it's showing signs that in the next 2-3 months it'll start to have that sort of 50-70k bump up, which is exactly what we want, and that allows us to take the equity out and go again. And very close to Carindale is Wakerley, and then one suburb that I know many people down Sydney, Melbourne way really like is Manly. So Manly is an oceanside suburb in Brisbane. It's about, 10 kilometers east of the Brisbane CBD, and it's, like I said, next to the ocean. The ocean is different in Brisbane than it is, the Gold Coast. So don't, mistake a beach like the Gold Coast to be in Brisbane. It's not that kind of beach or that kind of shoreline, but nonetheless the water is there, and Manly is a really, really good suburb. Sometimes buyers agents, I'm just bringing the data up while I do this, sometimes buyers agents, they say buy in Deception Bay and Redcliffe because it's close to the CBD, next to the ocean, but Brisbane's dynamic is different, right? In Sydney, if you're within 20 kilometers of the CBD and you're next to the ocean, like you're paying $1 million, $2-3 million. Brisbane, it's not like that. People don't gravitate towards the ocean. You can't take Sydney fundamentals and apply them on Brisbane. And if your buyer's agent or property investment strategist is doing that, once again, shop around. You need to get your retainer back and go to someone else, or cheeky, come to me. So Manly, super strong. It's once again, all these suburbs that I've mentioned today in this video are on the high side, because like I said, these are the suburbs that will grow the most in terms of absolute value. If you want another video on more inexpensive suburbs in Brisbane that will grow from a relative perspective but not necessarily absolute value, compared to these more expensive ones, just mathematically, leave a yes below. Tell me that you want it, and if there's enough people, then I'll do a video on it. So once again, Manly, when I look at the data, and I'm not looking at shops or anything like that, I'm not looking at infrastructure, all of that is just bonus. The data speaks volumes. What it tells us is that it's not quite due to rise too significantly. For example, stock on market is still relatively high. It's trending down, but it's trending from about 2.5 down to about 1.5. We need it to be much lower. We need that gradient of descent to be much steeper. But apart from that, everything looks quite good. Days on market is still a bit high as well. So this is like a really good example of something that if you monitor for 2 or 3 months, Manly, Queensland, 4179, in 2 or 3 months, the data will start to look better, and that's when we'll have more confidence. So here's one that I would say it's not going to go up, in the next 5 months significantly, but come July, perhaps July to December, this thing is going to make some pretty significant gains. So hopefully that was really valuable, guys. That was a pretty long video. I think the longest video I've ever done. Look, I put a lot of effort into doing the data analysis. If you genuinely enjoy this, let me know. Let me know in the comments. Share this, subscribe, like or love this, and that way more people can. This video can reach more people, and more people can get value. Like just by looking at these suburbs, right? You're so much more knowledgeable about Brisbane than just browsing high-level fluff, high-level surface-level information and podcasts. You could listen to like 20 smart property investment podcasts and not learn as much as you did from this 20 minutes. Or you could listen to the Property Couch for 150 episodes and not get as specific information as you've just learned. So, I'll leave a link below about how you can learn more about this. sorry, that didn't make any sense, about how you can learn more about all of this, especially the data, and how you can actually become your own buyer's agents. Because I can tell you right now that if you're in Melbourne and Sydney, and if you want to buy in Brisbane, there is zero need to hire a buyer's agent. Okay, and let me prove that to you using statistics, client results, and data, processes, and street smarts. So you'll learn all that in the link below. Click that. My name's PK. Peace out. If you vibe with me, let me know. If you don't, then leave an angry face. Catch ya. Bye.